Hello and welcome to Profiles in Risk. This is your host, Tony Cañas, and today I have with me Temitope Adeyeme. I hope that I got that halfway correct.
Absolutely.
From Nigeria. Temitope is founder and CEO of PIR. So Temitope, thank you so much for joining me today. And
thank you so much for Tony.
My pleasure, my pleasure. And a special thank you goes to Patrick Callahan, the insurance elephant, for putting us in contact. So Patrick is a dear friend of mine from CPCU. Saw him at InsurTech Connect, and he mentioned that he was doing some really cool work with a couple of founders abroad in the developing world, and that I should chat with you. And I'm like, absolutely, 100%. So Temi, what is PayU?
Yeah, PayU is pay as you use motor insurance. That basically is what we do. And there's this problem that has been in Nigeria for well over 20 years as regards motor collision insurance. There's this poor uptake of motor collision insurance, and over a period of 10 years that I've practiced in the industry, I went out to find out what exactly is the reason why there's this poor uptake of motor collision insurance. And I found out, number one, that the paucity of funds contributes largely to why people are not taking up collision insurance. They prefer to go with third-party motor insurance. Paucity of funds was number one thing we identified. The onboarding process, that's the cumbersome paperwork they need to fill out before they get onboarded on collision insurance, was one of the many problems. And finally, the hydra-headed claims process, where the claims could drag as much as 2 weeks, 3 weeks before it is settled, and sometimes it could be undersettled as well. I mean, the claim sum that is going to put the customer back to a pre-loss state is not, the payout is not up to that. So that has made users, purchasers of collision insurance have apathy towards the product, towards the industry as a whole. So we're now of the opinion that, okay, if these are the problems, what could this likely solution be? So we further went out to do a survey on when do users of collision insurance, when do they actually have claims the most? So we found out that it is when people are driving on the road that they have claims the most. When people's car are parked at home, 10 out of 10 respondents will tell you when their cars are parked at home, they do not have an accident or an incident. When their cars are parked in the office, they do not have an accident or an incident. But when they are driving on the road, 90% of time, 90% of our respondents told us that when they are driving on the road is when they have an accident or an incident. So therefore, we were of the opinion that, okay, so if it is when people are driving on the road, they have accidents, we're able to insure them while they are driving on the road. So we came up with, okay, so if people can have access to a solution that per minute billing, if they're on a 30-minute journey, they could just pay for 30 minutes. If they're on an hour journey, they could just pay for an hour. If they're on a 2-hour journey, they could just pay for 2 hours. So we came up with this solution of pay per minute. Of course, what you will probably be familiar with, Tony, is the pay per mile. But we found out that the pay per mile will not synchronize with our kind of work. Heavy traffic, you could be in traffic for an hour, and under the pay per mile, if you're in traffic, you're not being charged because you are not moving. And if you get involved in an accident at that point in time, you will not be indemnified because there was no premium paid at that point in time. But on the paper minutes, you know, it is a timer, it is ticking. So if you're in traffic for even 2 hours, the timer is ticking and you're being, funds are being deducted towards a coverage for you, basically. So the paper mile is good for an environment where there's usually low traffic or very lesser traffic, not every kind of traffic, you know, easy flowing kind of traffic is, paper mile makes a lot of sense in such environment, basically. So that basically is just the problem we have identified and the solution we have provided for that problem. And it was from the pay as you use, that was where we got the name PIR from.
Okay. So let me kind of go step by step. Okay. So pay as you use motor insurance. So when you say motor, it's what here in the US we would call auto insurance.
Absolutely.
In Europe,
Absolutely.
they call it motor. So just so we're on the exact same page. Okay. And then in Europe and in the States and in Asia, we have seen more and more telematic solutions that are pay by the mile, right? So if I understood correctly, the problem with pay by the mile in a place like Nigeria is that traffic can be so bad that you might only go 5 miles, 10 miles, and it might have taken you an hour. And
it might end up taking you 3 hours.
Oh my God, that's worse than Costa Rica, where I'm from. I've had this problem in Costa Rica where I lived in the US half my life, and I lived the first half of my life in Costa Rica. And there have been times where I've taken American girlfriends to Costa Rica, and they look at Google Maps and they try to plan the trip, and they're like, okay, from here to here is 15 miles. It'll take 15 minutes. And I'm like, no, hold on.
It doesn't work like that.
That's a 2-hour drive over the mountain, right? Or that's a 1-hour drive in traffic. So I totally get it. Yeah, if we were charging you by the mile, in a place like that, and I have not visited Nigeria, but I have visited like Vietnam and Cambodia and Laos and places like that have millions and millions of motorcycles that and the traffic can be really, really heavy.
Absolutely.
I totally get it. If we charge you by the mile, and you're in an urban area with bad traffic, we are significantly undercharging you. And if we charge you by the mile, and you are in a rural area with no traffic, then we are significantly overcharging you. Yeah, you're doing it by time makes a ton of sense. Are there, as far as you're aware, are there other companies in the world that do it by the minute? Like, are there other countries in Africa where
from Google search, there is absolutely nobody doing the per minute billing. As a matter of fact, our actuary scientist, in coming up with the pricing, he has had serious trouble putting up the data to be able to support. He has had, if the product existed anywhere else, it would just be easy to spool data from that market where you have it existing and be able to come up with your actuary calculations, But in our case, we're about the first person pushing out, rolling out this kind of solution. And our up until date, our actuary scientists are just giving us a preliminary pricing model. He's still working on it. It's taking him like 90 days right now. He's still working on it to determine a profitable pricing model that will be appealing to the users. And of course, the solution is not available anywhere currently yet.
Okay, so how did you come up with the idea of per minute if nobody else has done it before?
I just figured out that, if there's because so I visited I came for a conference in New York in 2017, and my friend out there was driving over the per mile model kind of thing, and he kept complaining about how the premium goes up at night, and the premium that overall is overpaying as compared to people who are just paying monthly fee, monthly premium, So then I figured it out that, okay, out of an entire year, you have 525,600 minutes in an entire year, And I figured out, okay, 12,600 minutes in a year. So if you drive for 30,000 minutes in a year, why pay for 525,600 minutes? I mean, it just doesn't make any sense.
Mm-hmm.
I mean, most of the time, your car is packed.
And
yeah,
so here
Go ahead.
in the US, 92% of the time, and this is before COVID, 92% of the time your car is parked. In Nigeria, are there a lot of people that don't drive every day? Because those are the people.
In Nigeria, a whole lot of people park their cars at home and use the ride-sharing platforms or use the public transport system, But the cars that are parked at home are usually driven on weekends, For occasional, people drive their cars on weekends,
Pay by the minute would make so much sense.
Yeah, absolute sense. So why should I pay an insurer for 525,600 minutes in a year when I actually drive for an average of 30,000 minutes? So that is where we're beginning to redefine how auto insurance is being done.
Okay.
And also putting this out again. PayU Technology is also a Delaware state registered business. So as it is, we already eye the US market,
Really interesting. You mentioned the low uptake of motor insurance or auto insurance in Nigeria. How low is it? Are we talking like 40%?
Yeah. So you have, say, for example, 20 million cars, and out of 20 million cars, you only have about 2 million that are insured under the collision insurance.
Okay.
And you have 5 million under third-party motor insurance.
Okay, so is like 10 to 15% at most.
Absolutely.
So you have a very large opportunity just within Nigeria, and then there's many other
very large,
similar.
Yeah, very large opportunity to a tune of $1 billion in premium annually.
Oh wow, and oh wow, okay, and nobody else is doing it by the minute. Okay.
Nobody. Just a simple Google would reveal that to you. Nobody, and you can just punch it in Google. Who is offering per minute billing in the world? It's not going to return anything.
Okay. So here in the US, in order to launch an insurance company, it is heavily regulated by each state, and each state states that you put a bunch of money away. So it takes millions of dollars to launch an insurance company, quite literally.
Absolutely.
So the venture capital companies that are investing, and even angel, well, especially venture capital. So the investors here in the States are used to the fact that you have to invest millions of dollars to really have an opportunity to make a market in this in this market. What kind of investments would be significant for your company in Nigeria?
Yeah, currently because we're just rolling out our solution, so we're looking out for something as little as 500,000 USD to be able to roll out our solution, and with the 500,000 US dollars, we're looking at a customer acquisition of 100,000. We've pulled so much traction by securing an MOU with a carrier, because out here in Nigeria, an insurtech cannot carry the risk of auto insurance. You know, you have to transfer the risk to a carrier. You know, so we have a carrier who we've consummated an MOU with. Was the same carrier is also putting out 200,000 US dollars in outdoor advertising. The same carrier is helping us with regulatory approvals and all of that. So we just need 500,000 USD to be able to hone on our 100,000 customer base for the first 12 months, and of course that of course returns 3.6 million US dollars in net revenue. So from there, we're looking at the Ghana market, we're looking at the Kenya market, and we're looking at the South African market. So, but the first 12 months, we want to be able to capture the Nigerian market, and before scaling out to other African countries. Yeah.
And what kind of limits are you? So here in the US, if I sell somebody auto insurance, chances are that they're getting, let's say, at the very lowest, at least 100,000 in maybe let's say 50,000 in liability in case they cause an accident and injure somebody else, and probably 50,000 in collision damage to their own car. So at the very my minimum risk on any given auto policy that I write, it's at least, you know, $100,000, $100,000, and often much more than that. So in Nigeria, what kind of limits are you planning on offering?
Yeah, so the limits we usually have is the limits on a constructive, or what you call total loss on the car itself, and the band of the kind of cars we're looking at insuring under the PIR solution are cars within a maximum of 20,000 USD.
Okay, perfect. So on each risk you're taking is between $5,000 and $20,000, basically.
Absolutely.
Okay, so that's the other thing. So not only it doesn't take that much money. I mean, from the perspective of Tony, it is a lot of money, but from the perspective of a venture capital firm or an institutional investor, 500,000 is almost a rounding error, and the risk that they're taking is $20,000 per insured. That's a low risk. So yeah, like
absolutely.
I can definitely see, with no competition and with a bunch of different, like with a significant market just in your local market, right? 15 million cars ready to be insured that are not being properly served in the traditional insurance market.
Absolutely.
And then, you know, like beyond Nigeria, you know, South Africa and other large African countries, and even beyond Africa, like this, yeah,
like India.
Oh my God!
Like the India market.
So,
Yeah, I'm here.
do you think that this kind of product would be a good match for the Indian market?
As a matter of fact, I have a colleague out there in India. You probably might know them, the claims consultant, Itesh. They are, as a matter of fact, they are seriously looking forward to the rollout of our mobile app, because our solution is coming in form of an API and a mobile app. They are anticipating. The Nigerian market and the Indian market are quite similar. Whatever sells in the Indian market, we also do well in the Nigerian market. Whatever does well in the Nigerian market, we also do well in the Indian market. Yeah, because we have that similarities as it were. So my friends out there are basically waiting for the rollout of this solution, and so they could get underwriting partnership so that it could be rolled out in the Indian market, and that's a huge one. You're talking about 1.4 billion people.
Yeah,
very huge market. Yeah.
So basically, we can test the idea in the Nigerian market. We can test it in a
absolutely
in a small portion of the Nigerian market. Maybe hit a home run or score a goal from the perspective of a more international metaphor. Now you've got the Nigerian market. If it works in the Nigerian market, now we can go after that 1 billion people market in India.
Absolutely. Absolutely.
So it's an exponential play for the right venture capital firm that is willing to invest in those types of countries. That is really cool. Really awesome. So it's distributed through an app, and if I understood correctly, basically like the idea is you advertise, which is a lot cheaper in Nigeria than here in the States. And they download the app.
So
go ahead.
Yeah. So our business model basically is a B2B to C. So the B2B part of our business is ride sharing platforms. So like the Uber, the Bolt, and some other local ride sharing platforms. So here's the thing. Most of the ride sharing drivers, the drivers on those ride sharing platforms don't have 90% of them don't have collision insurance.
Okay.
Yeah, they don't. Yeah. So our hypothesis, therefore, is if they could pay per minute for a trip they are embarking on, such that while they are on the trip, their cars are insured. Because, of course, obviously, most of the accidents ride-sharing drivers get involved in, they actually get involved in those accidents while they are driving, either going to pick a client or dropping off a client, a rider, So if our API is being plugged onto these ride-sharing platforms, while those drivers are going to pick a rider or dropping off a rider, if they are involved in an accident, then the ride-sharing owner would come up to say, oh, okay, so you have protection, you have cover for your damaged car, So it's a good one for the ride-sharing platforms because it gives confidence to drivers to come onto their platform, So, and people do very large number of hours here in Nigeria annually. I heard unconfirmed that on Bolt last year, that's 2020, they did 100 million hours in the entire year, So if they did 100 million hours and our API is plugged in there, that's a cash cow of nearly $10 million US. you know. So if you now combine Bolt, you combine Uber, you combine other ride sharing platforms, I mean, that's exponential figure, you know, that you might not be able to imagine. So that's the B2B part of our business. Then the B2C part of our business is we going out to auto shops, auto repair shops, selling directly to people who bring in their cars for repair, to consider this option of motor insuring, you know, dispatching our activation team members to shopping malls, to playgrounds, to car wash, you know, to talk to people about onboarding, signing up for our solution, basically. So those are our two different distribution of what you want to call business models, and of course our goal is 1 million customer acquisition over 24 months.
So when a claim does happen, how are they handled? Is it a traditional claims handling model, or what do the claims handling look like?
Okay, so if for a customer who is involved in a claim, there's a claim button on the mobile app that all you just need to do is to punch the claim button. So as soon as you punch the claim button, the camera of your phone turns on automatically, and you're requested to take a picture of the accident.
Mm-hmm.
Then you're expected to fill very little information on how the accident happened and where it happened, and if a third party was involved, the name of the third party, the address of the third party, the phone number of the third party, and vehicle details of the third party. Then you submit it. So once our user submits that, within an hour, one of our staffs is going to come in there. One of our staffs that have auto repair. They are professional in auto repair, would meet the customer wherever the customer wants them to meet within an hour, and would evaluate the accident, and of course also recommend a repair estimate to the customer. So if the customer accepts the repair estimate, our carrier will go ahead and send a discharge voucher. But if the user does not agree with our advised repair estimate, the user therefore will be asked to go to his or her own garage to get a repair estimate. So the repair estimate is passed on to our carrier for adjusting and investigation. Back and forth, our customers are going to be getting their claim within 36 hours from the time of incidents to the time when they are settled. Yeah.
That is impressive. That is a lot faster than average here in the US.
Because that's because we've seriously invested in the entire claim process. You know, we're trying to see how we can improve the traditional way of claim adjusting, where claim adjuster takes a day to 2 days to go and visit the customer. Negotiation could take as long as 1 week. Then the payment itself, so those draggy things. No, we want to cut back on those inefficiencies, by sending in a loss adjuster ourselves from PayU. The loss adjuster does the job within an hour, communicates the repair estimate to both the customer and our carrier. And once there's an agreement between the two to pay that amount, then the customer is paid. So your turnaround time on settlement could be lesser than 36 hours, depending on how fast you're able to both agree either way. Yeah.
Okay. So uh, if an investor or a venture capitalist firm listens to this podcast and they want to have a conversation with you, I will include your LinkedIn in the show notes. What is the best way to reach out and have a conversation with you?
Yeah, I'm available on my email. Email is a good one for me. And for anyone who wants to have a one-on-one conversation, Zoom is perfect. Zoom call is perfect for me. I attend to my email promptly. I have my email on my laptop, on my mobile device. So I get emails and I respond immediately. So the best way of reaching out to me is email or schedule a Zoom call. That's perfect for me.
Fantastic, and I see that you've got 10,372 followers on LinkedIn, which is impressive for any insurance professionals.
Absolutely. Absolutely.
For the listeners, if you think this sounds interesting and you would like to play in the Nigerian and potentially later in the Indian motor insurance market, reach out quickly because this is a good pitch, and he's going to find you're going to find funding, and so listeners with venture capital firms or other investors, reach out quickly. You don't want to miss this opportunity. Temi, thank you so much for your time. It's been very, very interesting. Definitely have learned a lot about motor auto insurance in Africa, which I did not know, and very, very interesting. And I really like what you're doing.
Yeah, thank you so much, Tony.
Thank you. And we're recording in the middle of the night for your local time, so I appreciate you being flexible, recording at a time that worked for me. Thank you very much.
Yeah, anytime, Tony. Anytime, Tony. I tend to calls midnight local time, 1 a.m. My development guys like to work in the midnight most times, 1 a.m., 2 a.m. So we keep grinding. I mean, we've got passion for this. We need to deliver this solution to our people, so that they could stop paying out of pocket to fix something insurance can actually help them out with. So thank you so much for your time, Tony.
Coming from a developing country myself, also having grown up in Costa Rica, and Costa Rica has a decent insurance market compared to Africa, but it is very clear to me that a proper insurance market is very important for an economy to grow. So it is awesome to see you doing this very important work that is going to help propel Nigeria forward. So great job.
Thank you so much, Tony.